StockTrak Team 13 Final Presentation. Presented by Jerica Harold, who had no experience with stocks, no investment background, and is a business management major. By Blake Rincon, who has no experience in stocks, no investment background, and is also a business management major. And Nicholas White, who has limited experience, limited investment background, and is also a finance major. The StockTrak Challenge is a national simulation in which Fresno State students compete in. We are given $100,000 to invest in stocks. This challenge started on February 15, 2016 and ended on April 22, 2016. And if required, we were able to purchase up to an additional $100,000 for investing. The team's SMART goals. We had very basic, very limited short-term goals. We wanted to make wise investments, positive investments, and our decisions we made on monthly trends. This was due to the team's very limited experience with stocks. Our long-term goals were also very basic. We wanted to make a profit, as most teams would. We wanted to be top 200 of the rankings, and we also wanted to go for low beta stocks for long-term goals. The investment strategy. As you can see, in the beginning we were aggressive, mid-simulation we were very aggressive, and towards the end we were moderate. The team began their efforts with moderately aggressive investing, attempting to jump ahead of the class early on. However, the investment had little to no payoff from the start, possibly due to the team's lack of experience. Therefore, our team tried to escalate their aggressive behavior by investing in stocks with much higher betas, such as DWTI or FCX. And if timed correctly, these volatile stocks could potentially propel the team to the lead. However, these stocks and their high betas were incredibly tedious and were hard to predict. This caused our team to make substantial losses, and we were forced to take a more conservative approach for the latter half of the investing period in order to regain our portfolio. So this explains the moderate towards the end type of listings you see down below. The stocks we invested in, the team made it a point not to invest in the well-known or safer stocks as was predicted for the rest of the class. In modest, this was not particularly a great idea, considering the team's weaker investing background. However, it would prove to be a more rewarding experience once the investing period had ended. Big names such as Walmart, Google, Yum Brands, and Apple were avoided throughout the trial and are instead replaced with lesser-known stocks. Stocks such as Conagra Foods, Chesapeake Energy Corporation, or the Decker Outdoor Corporation. There's DWTI, as mentioned earlier, on top. Our portfolio evaluation. Our portfolio was typically ultra-aggressive with a handful of stocks that were defensive. Defensive stocks were not typically held long in order to free up capital to purchase additional aggressive stocks. This strategy was not very profitable and is not recommended for long-term investors, nor is it recommended for investors who are barely beginning. Our portfolio and strategies may prove effective for day traders. As noted in the first listing, our portfolio was typically ultra-aggressive with only a handful of stocks to prop the foundation. It was in our team's greatest interest to day trade, however that was not an option. Our selection of stocks tended to complement or fit into a day trading position, and we made a multitude of trades throughout the investment period. Here is our portfolio value. We were given $100,000 to begin with on February 15, 2016, and this is how it transgressed for the first month. Here it is continued. Since we were incredibly inexperienced and tended to have more aggressive position, our place in the rankings would vary greatly throughout the term. As you can see here, towards the bottom on 4/21/2016 we were 190, and the next day we were 305. Here's our portfolio against the S&P 500 rankings. Our portfolio failed to exceed the index in profits. Our portfolio against the SPY rankings. Our portfolio also failed to exceed the index in profits. Our gains, $103,348 was made on 79 trades, which was our highest listing on record. Our efficiency was $42.39 per trade, which was ranked 124th out of 305. What made the difference were trading in Netflix and Weight Watchers, as well as Western Gas. With one purchase, we had bought 570 stocks for $429 apiece and sold them later on for $4,983 apiece. Our losses. At one point, we were only $89,900 on 55 trades. This meant that our efficiency was negative $188.36 per trade, good for only a rank of 313. We ended the investing term of $99,286.23, which was good for rank 305. This equated to a 0.0741 in turnover. Our biggest loss incurred through the stock was, of course, DWTI. Our first purchase we chose to hold. We bought 87 stocks for nearly $300, and we ended up selling later on for $208, which incurred a $7,942 loss. What we learned: we enjoy the competition against others. We enjoy the dedication, being consistent, and having faith in stocks. The research, the time development, and the ranking attribute to compare progress. Now, when the average person thinks about investing, they consider placing their money into good stocks and holding that stock. They hope that in time and value of the stock will increase. What we learned as we became more experienced is that valuable stocks can also come in the form of bad stocks. We learned it is possible to make so much money by betting against other stocks, called shorting. We also learned, however, that this strategy is only feasible in a perfect simulation. Since a short order can only occur when a buyer owns the stock, it is unlikely that there are many holders of bad stock. What we liked was the competition in the whole scenario, and we also enjoyed the small rush of adrenaline from earning risky moves. Our dislikes is that we could not day trade. As promoted through this entire presentation, we were typically very aggressive traders and would have benefited greatly from day trading. Another thing that we disliked was our inability to purchase options. Reflecting on this progress, we had success shorting our positions while selling an equity, shorting the stock with high profits. Our aggressive approach did not work out too much. It was not very reliable, but we did make thousands of dollars in profit from time to time. Ultimately, this is a double-edged sword. Our failures came from this aggressive approach, which was risky and contributed to much of our losses. What could we have done differently? Well, we could have had better constant communication throughout the simulation period. We could have put in more research. As talked about, this group had little to no investing experience, and we could have made better investment decisions. We could have dedicated more time to this research, and we could have kept better journals for logging each investment.